Morning, guys. Feels like that. I just woke up. I had a little nap after work. And for most of you, it is morning. But here for Asian traders, we've had a bit of an eventful day. Dollar yen has broken down to the fresh cycle lows, and this is a little bit. It's getting to that dangerous stage, but it's also getting to that opportunity stage. This is the level 113.30 was the level that I was having that long-term trade filled at. So I've got a long dollar yen filled again. Luckily yesterday we got out of that other dollar yen on the rally. And pound itself, it's been up to a little bit of mischief today. It's stopped me out once. I'm sold again. We're going to see how it plays out. I don't recommend that you sell before this announcement. I think I can trade my way out of it no matter what happens, but I will, I don't recommend you open up shorts just blade up thinking that this is going to be sell. It's likely to be sell, right? That, what's going on today with May is likely to be that sort of event. And I don't think it's going to end any other way. The short squeeze happening before the event also gives me a little bit more confidence that the case is going to be to the downside. But the market is pretty short, so there could be a short squeeze. Now that tactical sort of short squeeze, I think, will be only short term, and I think there'll be enough negativity in this speech tonight that the market will sell off in the end. But don't go to war from these levels. These are not the levels to go to war. If we're at 130 and we had a similar setup, then yeah, you can get a little bit more aggressive. At 121, you have to be respecting that the market is really low, and so there are ways for this to turn into a big rally. And the bottom be 120, so you don't really want to get caught short too aggressively down here. That being said, I am short already, and I want to see how we go today. And if the right sort of stuff happens, breaking 120, breaking 119.90, I'll probably be adding to shorts as well, and trying to add to that negativity if the market was to take us that way quite quickly. Now, this speech is coming out. It was a bit hard to find out when the speech was, but they've set down as 10:45 my time, which is around 2 hours and 30 minutes from now. And before that data, we do have, in 15 minutes, we've got the pound CPI. Now, Bank of England is an inflation fighting bank, similar to Australia, similar to ECB. So it is really important what that data comes in at. If we see some heat coming into the CPI, that'll give cause to allow the pound to rally into this speech. And remember, this speech has been widely sort of leaked, what's going to come out. So, the danger to being just straight up short here is that the market will have a bit of a squeeze if nothing new is delivered. Also, if it comes across not as bad as everyone sort of read into it. Maybe a medium Brexit, not a hard Brexit, and then you could get that squeeze again. Then that squeeze, if it does happen, I'll be looking to sell into just tactically, but I don't recommend you guys just straight up sell today. Yeah, this is not the sort of day where you want to be doing that. It's going to be quite dangerous, actually. US dollar is on the back foot. US dollar definitely is on the back foot, and so that could complicate things. It'd be nice if the US dollar was quite strong this time, but the US dollar is searching for support. And so you got that to think of too. That's another consideration for sure. Aussie dollar's broken 75. That's 200-day moving averages here as well. Euro's having another little crack. Got some stops building and one towards 107. No doubt we'll have a test of 107 as well today. So it is it's one of those days. Yeah. You want a little bit more sound there, Nick? I turned it down because people were worried about the wind. I've just turned it back to normal. Tell me if that affects the sound. Now, yeah, so even though I've been wanting to be long dollar yen from this level, this 113 level, and I'm I'm happy to be short on the pound in general. Now that it's actually happened, I'm a little bit worried about these trades. Yeah, a little bit worried. This is one of those cases in the FX where it's careful what you wish for. I want to pull back on the dollar yen so I can buy it. Okay, you got your pullback, you bought it. Now what are you gonna do? God, now I have to use some risk management. Give back all the gains that we made this month if I'm not careful here. Can quickly get out of control here. You can imagine a scenario here where the pound finishes at 123.50. That'd be dangerous. So I'm thinking now where to put my stop. I'm thinking now how to play it if the market turns very bullish very quickly with May. I haven't really made my mind up yet, but yeah, definitely I'll be closing if I get caught in the wrong side. Now the dollar yen as well. I suspect that we will get some spiky action at the end of this sort of pullback. Now that spiky action may not be gentle, and it may be of the aggressive kind. So a lot of traders on a very similar trade to this. A lot of clients are asking, where do we put our stops? We're going to buy this dip, 113. Where do we draw the line? Okay, well, this is a trade which this last 200 pips here could be done in 2 hours. Yeah, could be done in 2 hours. A sharp sell-off, and then sharp reversal back if it goes down that far. I doubt we're going to get that far, but prepare yourself for some sort of stop hunt. And if you've traded dollar yen for the last couple of years, you know that a move like from 113 to 111 isn't extraordinary. It's fairly ordinary at the end of profit-taking sort of pullback, especially if there was something to spur a little bit of risk aversion. So there is a scenario here where, say the pound starts to sell aggressively, pound yen will drag dollar yen through some stops, and pound yen is on its own little mission, and so pound yen itself is searching for support, and if it's negative enough, stock markets start to get negative, then dollar yen will get into a little bit of mischief itself down towards that 111, I believe, potentially in the next 24 hours. So that is concerning to me. So I don't really want to be stopped out in that next 200 pips. So it looks like I'm going to be committing a fair bit of capital to this trade idea. And at the end of the day, I might be actually, not taking a stop unless it gets to 109. Now that's big. That's a big sort of stop. But that's just I'm preparing myself mentally for the trade here that, we got in at 113. How bad it can get. Yeah. I mean, at some point, if the market keeps on correcting and doesn't stop, then you have to give in the towel, and it's no longer correction, it's a US dollar weakness, right? But it's, I'm probably being over dramatic. It doesn't have to have a big plunge at the end. Just so many times you have that capitulation sort of trade where really just plunges, and then rebounds really quickly in the Asian session. Pound's continuing to have a nice little rally here. This is before the data. It's not on the CPI data. It's short squeezing. We are now getting back towards the open levels on Monday. Oh god, this is going to encourage the gap traders to continue gap trading. Gap trading is something I have significant issues with, and yeah, that's a debate for another day. Alright, but this is the theory is that you just, if you see a gap, you look for the market to cover that gap. And so they'll be basically saying, oh, we bought at 120 because it's going to cover that gap to burn 22 at some point. Yeah, I understand what they're saying, but it's not something I recommend that you try and do, and it's very circumstantial. Some sort of gapping news doesn't allow a reversal. Some sort of gapping news is straight up that negative that the market will have a little bit of a rally and then pull back. This one isn't working out like that. The gap is getting filled, but it's really a dangerous strategy. You're basically looking for the weakest pair out there and looking to go counter trend trading on it. And that's why I really don't like it, and I get angry actually when traders talk to me about it, because it's like, yeah, I don't want to hear statistics on it. You're actually entering into markets where significant news is involved, and that could change the trend and could change everything. So yeah, I understand why they're doing it, but I just haven't seen it successfully done before either. On the longer term timescale, I've seen a lot more accounts get into trouble than make money. Yeah, a lot of it's US dollar weakness, FX RAM. A lot of it's US dollar weakness, and the pounds is taking advantage of that. But we'll see. I don't have a good feeling about these trades actually. But if you had a good feeling when your trades are negative, you'd probably be a little bit crazy. So a little bit more aggressive than I thought, and be happening before the May speech is not good. Let's see what she's got for us today. Like I said here, the euro, which is on its own movement, dollar yen's got that 113 level, which stops will be below it, but euro's got its own stops towards 107, so I guess those will be hit relatively shortly. Really is morphing into quite a US dollar weakness, isn't it? Let's have a look at the US 10-year, see what's going on there. Remember, it was closed yesterday in the when we went to look yesterday because of Martin Luther King. Ooh. Wow. Okay. Got ourselves a little bit of selling. Shouldn't be a surprise given the US dollar weakness, but that's not what we want to see, guys. We do not want to see this roll over, break that fresh lows. That will drag the whole market with it. We'll have to talk to a bond trader to find out where the big support is underneath this. Like, it may look like a little move, but that's the US dollar rally here. And so this looks like a dollar yen chart a little bit. And this is the prime mover. This is a dog that wags the tail. So let's hope for some stabilization here, otherwise things are going to get messy in the US dollar. And I personally will lose some money on this. Yeah, but we're not too crazy here. We've got two lots. It's not crazy stuff, but it isn't looking nice right now. I'm not comfortable with this short squeeze. Don't follow these trades if you don't like risk. Yeah, this could get dangerous, and you might have to close manually on the fly. If you're not comfortable doing that, probably don't follow this. Alright, let's have a look at a bit of research. Lots of research regarding the pounds come out the last 24 hours. And we got data in 3 minutes, so let's bring up the data. Let's just have a look at the pound there, and watch a bit of that data in a sec. I don't usually get caught in a market like this. Can't win every day. Maybe I'm going looking for trouble, selling the pound. Yeah, bias is to the risk of. How we're going to do this? Maybe we'll pull across some Twitter. That'd probably be the quickest to do. Now, anecdotally, there is a bit of inflation growing around the world. The expectation is for 1.4, an increase of 0.2, which is not nothing. And with a very low pound, if anything, that could be importing inflation. Couple seconds. So this is not as fast as a Reuters machine, but this is about as good as you're going to get without having Reuters at home. You can also use Forex Factory if you like, and Talking Forex is also pretty quick. Any second. Alright, so 1.6, pretty strong. Pretty strong. That's not going to stop this. That's probably going to encourage this to break 122. Oh God. God. I tell you what, I'm probably going to cut this. And I'll sell again shortly. I'll be looking to sell again shortly, but yeah, no. Just for now, I'm going to see how silly it wants to go. I'm going to keep an eye on it though. It's pretty hot inflation. Well, it's nowhere near the concern levels. It's definitely stronger. PPI was a little bit weaker. Tell you what, just to so basically just half my exposure, then I don't want to be fully not exposed at all, but I won't get into as much mischief now. The reason why we just re-entered is it's stalling here. A lot, I thought it would actually pump 122, 122.50, and I wanted to sell into that. I don't want to, so the market stalling a little bit is enough for me to get back into. But this again is not a trade I want you to follow, guys. Even though I'm trading this real time, it's not what I want you to follow, because this is going to be very dangerous tonight. And if you don't have the ability to close out, which many traders, it's really a hard ability to sort of to develop the ability to close out on the fly, then stick to the sidelines. Just watch the price action tonight. Alright, let's have a look at some bit of data there regarding what's coming up tonight. It's Nomura put out a nice little article I was reading earlier. We think indicating approach to negotiation that leads with a clean break, hard Brexit from the EU will provide just as many new questions as those about the future of the EU-UK relationship. That's my main basis as well. I think basically the market's going to have so much uncertainty that the easiest thing to do will just be sell, sell, sell until it's over. It's you know, let's just see what she focuses on. Control of immigration does a little bit mean that they're going to have to step outside EU control at all. Alright, what do we know? The red lines, yeah. Pound's falling further, yeah. Economic growth has been pretty strong. Outlook is a little bit dangerous. So this is going to be like the biggest update that we've got from the UK government, the speech today. And the sort of, I think we're going to be able to read into the tone of her speech to see how exactly she wants to play it. And it's going to make it, you know, if it comes across pretty negative, or that this is definitely happening like this, then I think the market will sell pretty aggressively for the next week or so. Trading on emotion. Yeah, I am. Fear. Fear gets. That's my main emotion now. Yeah, I mean, I think you're right about that. She's going to have a political speech here, not a economic speech. And she will probably be singing to the heartland. Alright, let's have a look at Deutsche Bank's little view here. How short is pound positioning? This is an important part. What treatment for the City of London? I mean, if things go really bad, you can see the financial capital in Europe change. It is really potential, you know. Unlikely, but I think that's the most negative outcome here for UK in the next couple of years. Alright, so positioning has definitely lightened up in the last couple of months on the pound. So it's not like it's aggressive on the short side. And hedge funds aren't really that aggressive either. So there is potential for re-engagement here on the downside. This US dollar weakness though is making things a little harder. How is that friend dollar yen going? So this 113 level is being tested at the same time 106.80 is being tested. Probably both are going to break. Now after this speech tonight, guys, we have to quickly go back to focusing on Trump, and a little bit before Trump there is Chinese GDP, so it's going to be important here for Aussie dollar more than most, but just generally how the Chinese economy is faring will come back into focus during the Asia session on Friday. Now they've forecast 6.5 for 2017, so they're probably going to hit something like 2.5. And estimates for last quarter was 6.7, so it's probably going to be close to that. They're very good at hitting targets, too good obviously. They're just maintaining control over the statistics in the economy. But if they start to talk dovishly, and they've been talking pretty dovishly, the outlook, these are the official outlook, then there could be some sort of downside. But most analysts are looking at stabilization in China, not really this sort of hard landing. Seems like the soft landing is the main sort of outlook here. So unless we see something to counter that view, I don't think there's any. It won't be tradable. Yeah, it won't cause any sort of negativity. If anything, it might add some positivity that's already coming through on the Aussie. Aussie is probably the most bullish of all the pairs against the US dollar. Its recovery in the last 2 weeks has really defied my expectations, that's for sure. It's developed really, quite bullishly. So if you're looking at the Aussie versus most pairs, Euro Aussie is the one that we're looking at there, trundling along, and the Pound Aussie right back at those low levels that we saw. And isn't a bad way of showing, in the last 2 weeks hasn't been a bad way of showing, expressing pound weakness either. But I'm just playing this straight pound at the moment. Alright. one more loose little update before we end it early. I'll probably be in the room actually tonight at 10:45, so we can sort of go over what she's speaking about. It won't be live on stream. I'm not sure if Andrew or Jason are going to have this stream live of her speech. Nick might be able to put it up in actual the room so we can see what she's saying and talk about it in real time. If he doesn't, then I can definitely do that too. It's not that hard a thing to achieve. And we can have a sort of a little discussion about how it's been read by the market. I suppose there's a 12-point plan coming out. One of them being breaking away from the EU. There is a big chance that Trump also under-delivers in his inauguration speech. His press conference led to the dollar yen selling seen here. That was the dollar yen selling from the press conference. Definitely can get more dollar yen selling if he doesn't inspire confidence in his outlook. And I suppose it can't be ignored that iron ore is continuing to rally every day. So in terms of how far iron ore moved, I think it was up like 40-50% from the bottoms. Let me just double check for you. Like, it's an aggressive mover. And you hear big moves in terms of how far the market's moved today or yesterday. 5%, 10% here, and it's actually wow, yeah, 50% off. This is sort of the last time I checked it. I know it had rallied sharply, but if you're looking inside the daily as well, yeah, definitely on the top side here now, testing. Where's the resistance? It's broken that. Yeah, I mean it's not like we trade iron ore and Australian dollar like Canadian dollar and oil. But it's definitely something to keep an eye on. The little point here is critical for this whole dollar yen trade, which is my main trade for the next couple of months. We do need to see the US yields continue to rise. Japan's yields aren't going anywhere, and so it's really US yields which are moving everything. They have expecting consolidation. Okay. Alright, where's their second level? Alright, one. Yeah. So this level's been broken. This 113.50. They're looking towards 111. Yeah, that's These are fib levels. Yeah, this I can understand this being not a bad little target. Very similar to my sort of eyeballing levels off the previous support back in. Sell-off in dollar yen actually happened in January last year. Now most of it was led by Chinese devaluation, but it was pretty sharp, so it could definitely get more aggressive than this if you were around for that. But that was accompanied by stock market weakness. Now the big difference between last year and this year, US stocks have not fallen back from the 20,000 level significantly, so they're still holding. So dollar yen's fallen without stocks even coming to the party. You can imagine if stocks start to fall as well, that you have some significant more selling pressure coming through. I don't know about iron ore, mate. Every day it seems to be a mystery. Like you see big headlines come across, down 5%, up 10%. But yeah, look, a lot of it seems to be Chinese speculation more than anything else. If anything, you hear that there's stockpiling of iron ore and stockpiling of commodities in China, and that the real demand is not there. But yeah, a lot of smoke and mirrors in that. That's very opaque sort of market compared to FX anyway. I haven't looked at City FX's forecasts for this year. Very aggressive. Very aggressive. That's 108 on the dollar index. Now, dollar index is something to keep an eye on too. It's probably pulling back right now, and 100 is a big level. So 100 is coming into play fairly quickly. We'll have a look at that tomorrow as well. They're very negative on dollar CAD. Not so optimistic on dollar yen. I suppose they're right not to be. Things probably going to be unstable in the stock markets this year, I think. So, you know, range trading is becoming a little bit more my view. I still think it's getting it to 120, but I think any big rally will be sort of capped by some sort of market volatility, which yen becomes the safe haven. Alright guys, so 2 hours now until the May speech. Let's see what happens with these 113 levels and 106.80. As a US dollar bull, I want to see these levels tested, broken, then the market pull back in. So I'm hoping that, you know, we're talking tomorrow and the market's at 106.40, 106.30. Dollar yen's back at 113.60. If we see ourselves at 107.30, dollar yen at 112.50, that's a more dangerous sort of scenario, and we may have to close some trades here, just waiting for the market to turn. It's dangerous to get too stubborn. Yeah. US dollar rally, that's so 2016 December is what we'll be saying. Alright guys, trade safe. By no means go aggressive on this May speech, and by no means go aggressive on this dollar yen level. It is the nicest level we've had in a couple of months, but it's still showing signs of pretty strong weakness, and yields looking for support. and there's no catalyst apart from Trump on Friday, which is still 3 days away now. Alright, trade set, good luck.